Thank you for taking some time and thank you for visiting our webinar. Okay, but before we start, let me introduce myself. I'm Gregor Horvat. I'm technical analyst and trader at www.ew-forecast.com, and I'm in Forex market since I was 18. When I was 18 and when I opened the first Forex demo trading account, I got totally impressed by the Forex market, by the Elliott Wave theory, okay? But trading is not easy as it seems at the start, okay? So when I was learning Forex and when I was searching stuff across the web, I found the charts labeled with ABC letters, okay? I have no idea what that is, but after watching those charts for some time, I noticed that this is actually marking a pre-wave movement of the price on the chart, okay? So starting to trading that way was looking only for pre-wave moves, and my trading became quite successful at the start, okay? I was better and better, but because I was better and better, of course, I wanted to go further. I want to know what this ABC actually means, okay? And after doing some research, after was searching for some educational material, I found that this is actually the Elliott Wave theory, okay? So I found this book, Elliott Wave Principle, Key to Market Behavior by Frost and Proctor, and I read it a few times, and since I read it, I just cannot trade without counting the waves. Even if I see just chart without labels on it, I see waves, I see wave patterns, and if you know how to count waves, you can trade. Okay, you can trade successfully, but of course, the Elliott Wave theory is not for everybody. Okay, it's a lot of time involved, a lot of monitoring, a lot of patience, but maybe you will find some useful information in this presentation. Okay, so always when I'm talking about the Elliott Wave theory, people, new traders, are very often impressed by the ability to predict where market is headed next, okay? With some very simple Elliott Wave rules, guidelines, and Fibonacci ratios, you can actually predict the next movement of the market, okay? For example, if you recognized the wave and if you were waiting for a market to bounce from one region, okay, and this market bounced exactly from that region that you expected, okay, then of course what you will do, you will take advantage of this wave that you recognized earlier, and you will go with the market, okay, and this will then increase probability of your success, okay. In Elliott Wave theory, it's all about the patterns, okay, the structure of the market, the shape of the market, the shape of the price, but it's something that it's not only in financial markets, okay, it's everywhere. Like, for example, water waves. They are smaller, they are larger, okay, different sizes, but most importantly, they are all different shapes, okay. In fact, they can be predicted in some way, okay. It can be predicted direction. It can be predicted when they will occur by a weather forecast, for example, okay. And it's the same with the structure of the market prices, okay? The patterns will repeat and they will repeat. But the most important is that when you will identify them, you can predict the next direction of a trend. Very simple, okay? The most important is also that Elliott Wave Principle is not something technical, it's something behind it, okay? How the waves are forming, what is the cause for some movements on the market, okay? So I think that in this part, it's very important, the psychology, okay? The Elliott Wave Principle reveals that mass psychology swings from pessimism to optimism and back in a natural sequence, okay? I like this picture very much. If we take a look at this part here, look this guy. When he said, "This is madness, I can't take anymore, goodbye." Why he said goodbye? Why he can't take anymore? Because obviously the stock market is falling and he's scared for his money like everybody would be. Okay, so he wants his dollars back and what he do, he will sell his asset with a loss, okay? And when he say goodbye, these guys here are considering, did he say goodbye? While this one is already considering to buy it. While he's considering, well, group behind it is already buying, okay? So it's actually this group, small group, caused a reversal while this guy sold it at the end of the trend, okay? When this guy sold it, when it was totally depressed, the market then turned bullish, okay? But what this psychology actually means in Elliott Wave theory, okay? So let's see on the wave pattern. We have very simple 5-wave pattern here called an impulsive wave. 1, 2, 3, 4, 5. In wave 1, only 10% of traders will be involved in the market, okay? Then some percentage of these traders will book their profits, which will cause a correction in wave 2. When price will move higher and took this high out of wave 1, new traders will get involved, which then cause an acceleration for wave 3. Okay, so at the top of this wave 3, we have 70% of traders, around 70% of traders who are positioned long. Okay, this is actually the reason why wave 3 in Elliott Wave theory is usually the extended and longest and sharpest wave of this 5-wave movement. Okay, but at the top, again, same as in wave 2, some percentage of this trader will book their profits. Okay, and when the price is in smaller range, then traders are waiting for confirmation of the market, where the market will go. Okay, will it go down or will it go high? Well, when the market goes higher and breaks this high out, then of course new traders want to get involved in the market again, because now they realize, hey, this market is bullish, we need to be involved in, we need to be long, okay? But unfortunately, they are too late. Why? Because we are in a 5th wave of a 5-wave pattern, okay? And we know that in Elliott Wave theory, reversal occurs after every 5 waves. And remember those 10% here, which caused this trend? Well, again, they are correct. Once again, 10% of traders are correct. And those 80 to 90% or other traders who are wrong will again cover their losses here, which again will cause a downtrend acceleration. Okay, and I'm sure you remember all late 2006, 2007. There were a lot of area of optimism, a lot of good news, a lot of financial media were talking about stock market was up, I don't know, 40-50% in the past few months. Okay, even my friends called me and asked me at the time if it may be good to invest in the stock right now. I said, yes, you are in a bullish mode, okay? But when there are all traders around you or crowd around you who want to be involved in the market, then you need to be aware that something is changing. The mood is changing, okay? Because the market is too optimistic, okay? So this will then probably cause a reversal. Of course, it's not the game here to call a top, but just need to be aware of a potential reversal, which means when a lot of traders will want to get involved, you should be protect your profits, okay? You should get out of trades. If it was the same in 2009 when the market was falling sharply, which was caused because these traders who were long here booked their losses here, which caused downtrend acceleration. And again, only 2% of bulls in 2009 caused this reversal higher. Okay, so again, only 2% of traders were on the right side of the market. Okay, but the most important is that if you know the Elliott Wave theory, I will not say that you could predict this wave, these movements, okay, this lower and here on the upside, but I will just say that this movement should not surprise you. Okay, so let's see on the wave structure here. Here we have a nice clean 5-wave movement from this low here, wave 1, wave 2, typical extended wave 3, wave 4, and wave 5. Okay, we know that after wave 5, reversal in a trend should occur, but the Elliott wave theory is not to call any top or bottom in market. Okay, you just need to be aware of a potential reversal, which in such case was confirmed when market fell below this extreme here. Okay, it was similar in 2009. We had 5 waves down. Okay, and when market turned higher here, we knew, hey, this was a 5-wave structure. Of course, the market will move higher in the opposite direction. Okay, very simple. And now let's take a look what are actually advantages of the Elliott wave principle. Okay, the most importantly identifies the trend. What it means? Well, identifies the trend. We have 1, 2, 3, 4, 5. This is our trend, which was at that time bullish. Okay, then identifies a correction contra-trend move within a larger trend. Okay, this was our trend, and these were contra-trend moves within this trend, within larger trend. Then identifies a start of a trend or continuation of a trend. Very important. Start of a trend. We know that every 5-wave movement shows direction of a trend or start of a trend. Okay, here we have 5 waves down from new extreme. Okay, so we know that this is a start of a trend, and here we have continuation of a trend. Well, when you have 5 waves and 3 waves of a pullback, then of course you know where market should continue, in which direction market should move. Well, in our case, this of course I suspect will be to the downside. Okay, because it identifies continuation of a trend. Also, next, very important, identifies specific points of invalidations. Okay, I think this is the most important. Why? For example, that you want to get involved within this lag, okay, within this rally. So you wait on a pullback where you will want to catch the uptrend. So let's say that you want to get involved in this wave 4. So where will you place your stops? Here, 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 and here? Well, if you consider these points of invalidations from the Elliott wave theory, then you will place it here. Why? Because you know that wave 4 must never trade in territory of a wave 1. Very simple. So actually, these points of invalidation tells you when or where you are wrong. Okay, so if the market will just continue sharply higher and take this 2007 peak out, then of course I know that analysis was wrong and I need to adjust it. Okay, very simple. But this is very important at trading, these invalidations. Okay, the next one, projects price objectives. Wave principle projects price objectives. What it means? Well, let's say that we are in a wave 4 here. Okay, so you suspect that wave 5 will unfold. In which direction wave 5 should move? Well, we know that next price objective will be below wave 3. Okay, then with some Elliott wave guidelines and Fibonacci ratios, you know that wave 5 will exactly reach the bottom somewhere around here. Why? Because when wave 3 is extended, usually wave 5 and wave 1 are equal. Okay, so this reversal here, once the reversal occurred, I must say, and once the market moved to close to this extreme of wave 4, then this was a very important level for which tells me that trend has changed from bearish to bullish. Okay, guys, as I see, we are running quite out of time, so I will now leave it to my friend Alexander. He is a very good trader for more than 20 years now. He's also working with me on this website here. So he will cover the basics of the Elliott wave principle for you, and at the end we will also take a look on some live markets and we'll analyze some forex pairs especially for you. Okay, so talk to you then. I will now leave the microphone to Alex.
Okay, guys, so Grega gave you some insights on the Elliott Wave patterns. First, me to introduce myself. My name is Aleksandar Koprivica. I came from Serbia, Belgrade. I started with an Elliott Wave, let's say 6-7 years ago, and I trade for one large international bank. My teacher was one of the, let's say today, one of the greatest Elliott Wave traders, Mr. Todd Gordon. And as I saw, and I first had a touch with an Elliott Wave as well as Grega, I became merely digging myself into this theory. And ever since from them, I'm trading only according to the Elliott Wave principle. I will try to give you a small let's say introduction how you should see the Elliott Wave patterns. Elliott Wave identified, R.S. Elliott identified around, let's say, a beginning of the 20th century. He studied the Dow Jones Index. Actually, the Elliott Wave patterns was spotted on Dow Jones Index. He found the 13 recognizable patterns which repeat itself in ever-changing structures, revealing a structural design in nature. Okay, so this is very important to understand what Grega was telling to you. And these structures always, as we're going to see in these presentations, appears again and again in the same basically modes. He noticed that these forms are appearing again and again on all time frames. So if you go on a daily, if you go on 1 minute, 5 minutes, 1 hour charts, you will see them when you know how to see them, but not necessarily in the same amplitudes and time intervals. So these 13 patterns which somehow intermingle with themselves and form in a different patterns, not necessarily in the same time, but they will make themselves connected. You will see how does it goes. All of these patterns to a careful and a disciplined trader or reader can reveal a current and potential future psychological state of the market. So in Elliott Wave principle, we are not basically dealing with market itself. We are dealing about the psychological state of the market behind. So like Grega said, what is moving the market? What is moving the markets in patterns? Okay. So as you see here, there is some patterns here with the shells. They're all on Fibonacci ratios. We all know that Da Vinci used Fibonacci ratios, all of the arts, and so we are talking about these patterns which are nature are formed and which markets are really formed. Okay, so as Grega explained, we have a basic Elliott Wave pattern with Elliott Wave rules. We are going a little bit deep into them now. So as we see a basic wave pattern, which consists of the 5 waves. Okay, so there is 1, 2, 3, 4, 5. They repeat again and again, and we have some rules here which define this pattern. So the first rule is that this wave must subdivide into the 5 waves. Okay, so we see 1, 2, 3, 4, 5 waves. Everybody sees that. Okay, and then okay, so we see a pattern 1, 2, 3, 4, 5. Okay, this is the market pattern which you see here. There is 1, 2, 3, 4, 5. So always subdivide into the 5 waves on any time frame. So if you take daily, weekly, 1 hour, 1 minute, you will see everywhere this pattern forms. So the rules and guidelines of the Elliott Wave are these basically. So this is all what you have to remember. Afterwards, now there is a more complex things, but for the beginning you have to remember this wave. So okay, this rule. Wave 2 always subdivides less than 100% of the wave 1. So what does it mean? When you see this move in the market, wave 2 will never go below this low. Otherwise, it will completely ruin the structure. So this wave 2 will never cross this point here. So this correction will never get under the point of when the wave 1 has started. So this is very important because, for example, if you see a move structured in the 5 waves, let's say in a 5-minute chart, and you want to trade it, of course, you see some impulsive wave, which has this structure and obeys these rules here. When you want to, and this is obviously a corrective wave, we will go into that later, you will get the whole picture. You will go, of course, if you go long, you will place your stop always below this low, because we know the rule, and the rule keeps you to lose much of your money if you're not correct. So the wave 2 can never go below this low. Wave 4 retraces less than 100% of the wave 3. What does it mean? So this wave 4 can never go down up to here. So this correction after the wave 3 will just appear somewhere around here, and it will never enter the territory of the wave 1. This is very important because this is one of the, again, invalidation points of Grega, which was telling. You see on this example, wave 4 never entered the territory of the wave 1. Okay? So we see wave 1 is here, wave 2 is here, then we have 1, 2, 3, 4, 5 waves in third, 4 wave correction, and then 5 waves up. Okay, so this wave 4 never entered the territory of the wave 1. So if you're in the position of trading the wave 5, of course, your stop will be just below this point because the wave 4 can never enter this territory. And why the Elliott observed this? Because he observed it because the wave 4, if it crosses the territory of wave 1, we are not talking about impulsive waves. So he was thinking there is not enough of the strength behind this move to support the impulsive structure. So this is very carefully thought when he made these guidelines. Okay, and the final rule, wave 3 cannot be the shortest wave from 1 to 5 and must be an impulse. So wave 3 can never be the shortest wave. So it cannot be shorter than wave 1 and cannot be shorter than wave 5. Okay, so if you see the waves like this, and the third wave is the shortest one, then we are talking about some correction, not the impulsive form. Okay. Okay. Are you following me? Impulse. We define an impulse when we see this kind of structure. So the impulse wave is basically the wave in Elliott wave theory which follows all of these rules here. That's how we define an impulse wave. Is that clear? So whenever you see, I will show you later the examples, whenever you see the impulse wave, okay, then when we obey this rule, okay, there is two rules more. The wave 2 are never triangles, you will see afterwards, and wave 4 can be any corrective patterns. Okay, let's go further. So in Elliott wave theory, it is basically very simple. It might look complicated, but it's just very simple thing. You have impulse waves, motive waves, which consist of diagonal triangles, leading diagonal and ending diagonal, and corrective waves. So this is the all forms of the waves you have to remember. So there is an impulse wave structure, which we saw. There is a motive waves, which are still not impulse, but they has an impulse structure in motive, so they're motivated impulsively, which are leading diagonal, ending diagonal. I'll show you on a very clear example. And we have a corrective waves, which appears in a place of a wave 2 and a wave 4. This is zigzag, triangles, flats, and combinations of these three. That's all in Elliott wave theory. So all what you have to remember is that how to obey these rules and read them on the charts, and how you can recognize all of these moves. They're very specific and very recognizable. Okay? Just a second. Okay. Let's follow further. Okay. So I will show you one more concept in the Elliott wave. So in Elliott wave theory we have a cycles and degrees. Let me just put down this chart so this can be freely. Okay. So what does Elliott mean by the cycle? The cycles are going. You see this chart here. It's from 16th century. So you see clearly there is a wave when basically the stock markets are introduced. So this is the combined index of British and American shares. So we see from 16th century, we see wave 1, wave 2, a corrective wave. And then we see a huge wave 3 going up to the almost 2010 or 2008 when we start the huge correction pattern that we are in the beginning of. So you see, this is the grand super cycle of the wave of the progress of the let's say humanity in a form to product. So do you see the idea? So all of these waves can appear on a very large scale, very large time frame, and on 1 minute chart. So there is a division into this. So we have a grand supercycle. The bars are monthly bars. So we see from the 16th century, we see the chart here. And now you see what we are facing, a large corrective pattern here in a wave 4. Probably we will not see the end, so we will not be alive. But anyhow, we will still we'll see on what corrective pattern this will unfold. But actually, this should be a triangle. It should last for the next 60 or 70 years. Okay. So what I'm trying to show here is that the waves are functioning on all degree cycles. So this is from 17th century, we are coming to 2010, and we see that the super cycle, which comes in weekly bars, finished around here, and now we are correcting with all of these problems. We are starting a correction here, which can be a flat or some other type of correction. Okay. So we have a cycle, days, primary count, which this is the time frames of the charts, intermediate, 4-hour charts. Okay. Minor, 60 minutes, minute, 45 minutes, minute. Okay. You see, this charts, Euro-Swiss, I will explain it. You see a daily chart. You see 5 waves down. Okay. So there is 1, 2, there is a impulse wave in a third wave, 4th wave, and the 5th wave bottoming here. Okay. So this is the one more concept in Elliott Wave, which covers that the waves are appearing on all of these cycles. So grand supercycle, cycle, primary, intermediary, minor. So we are involved working with cycles and waves within the cycles in the human progress. Okay. So let me show you again now the same basic pattern which you have seen. There is a wave 1, correction wave 2, 1, 2, 3, 4, 5, wave 3, correction 4, 5. You see this very clearly. Everybody sees this Euro Swiss franc on daily? Let me see. Just reply. Do you see all of this Euro Swiss chart? Okay. Okay, so you see it. So what I was explaining, this is of course inverse because the waves are functioning in inverse in bearish and in bullish market. So you can see the structure we explained in the beginning. So there is wave 1, wave 2. There is a large wave 3 unfolding here, wave 4 corrective, and the wave 5. So these corrective moves, which you see, are not impulsive. We will see a bit later why that's not on. I just wanted to show you on one example how you can see these waves unfolding. Okay? So, okay, let's go further. I talked about the motive waves. Okay, the motive waves are something which is developing in a leading diagonal. The leading diagonals are the only structures which can break the Elliott wave rules. And only one rule, that wave 4 can enter into the territory of wave 1. No, it's not difficult because, I mean, sometimes it is, of course, but that's why we use the Fibonacci ratios to define the third wave, and you will see how. Okay, I will show you. Okay, so this is a leading diagonal. You can see on dollar index chart, if you have it, a nice leading diagonal when the wave 4 enters into the territory of wave 1, and the leading diagonals are usually like this. You have a kind of a perfect example here and a bit example here when you see a wave 2 corrective, and then we have a nice strong third wave going up. Everybody sees this chart? Okay, usually you start when you have to count the waves when you have an impulse wave and a corrective wave. That depends which structure do you look. If you look on daily, you can start your counts on daily, which Gregor will show you later, and you can go to 1 minute chart basically to know where you are. Okay, I'm just trying to explain you the parts of Elliott wave theory, which you can see what are the basic composition of the waves. Okay, so we have an impulsive waves, leading diagonals, which you see, which is clear here on dollar index. Then we have a correction, and then we have a nice impulsive 1, 2, 3, 4, 5, and 3, 4, 5 wave, third wave up. Okay, so I'm going to show you an ending diagonal. An ending diagonal, it's the leg which is finishing in the fifth wave, and it's finishing the structure. If you see the Aussie dollar 2008, when the crisis began, you see a nice ending diagonal which signals to the Elliott Wave traders that the long-term trend will finish. Okay? So you see on daily, and you see what happened afterwards. So there is a structure in this ending diagonal which consists in 3 waves, 5 in 3 waves, so it's ABC. I will explain you that later when we go on triangles. Each has a 3 leg, and 4 enters into the territory of wave 1. But see the crash afterwards. You see, so to Elliott Wave traders, this signals that the trend, long-term trend, is over. Okay? Okay, so let's move into different wave counts. We see one basic Aussie dollar June 2010, 1, 2, 1, 2, 3, 4, 5. So you see impulsive wave here. You see here impulsive wave, correction. So see, these corrections are not impulsive. They're really like going a sideways, this is the times when the market really, some traders are taking their profits, some traders are entering long. So it is really undecisive market in which direction it will go. So it doesn't tell anything to reader, but if you know the Elliott Wave theory, you know that you can recognize that this is a corrective wave, and then you can basically track yourself on the map to know where you are in one chart. So Elliott Wave helps you basically to find your place. Where do you want to start your trades, and where are you? It's like a map. If you know to read the charts according to the rules, you can find yourself where you are. Because if you are here and you see this chart, you're not going to go long, because you see that there is already 5 waves up. The structure is completed. You're not going to go long here, because you see an ending diagonal finishing, and then, of course, the market turns into another direction. There is one more concept in Elliott Wave. There is a multiple waves. There is 1, 2, 1, 2. This occurs very rarely and occurs on a larger time frames. When we see a huge trending market for several years, we see a market slowly forming in 1, 2, 1, 2 formation, and then starts subdivided into a long trend in a one direction, bullish or bearish. So on this form, you can recognize as well this, because immediately you will see that this enters into the wave territory, and you will say, okay, maybe this is the correction, maybe not. But you will definitely, if you look on larger time frames, might cross the idea that you have a multiple waves forming. So it's basically markets are preparing to go a long time in one direction. Okay. So let's see a corrective patterns. So the corrective patterns are the patterns which are forming. This is corrective pattern. This is corrective pattern. So all of these pullbacks are basically a corrective pattern, and they have their forms. So Elliott made the work so that you can recognize these forms. So you can again see where are you on the map. Where are you on the map on this chart? Okay. So this is the only forms of the Elliott Wave pattern. So we have Zig Zag, which is basically 5-3-5. 5 waves, one direction, correction, and it's finished. We have triangles. You already probably heard about triangles. We have flats, which are a bit complicated, but I like them the most. This is the most tricky one. And we have combinations of all of these 3. I will show you all of these corrections so that you can basically find them on the charts. Okay. So let me start with the zigzag pattern. Okay. We have again our Euro-Swiss beginning of the fall. So here, the ABC corrections in a bull or bear market appears usually in a second wave place. They have 3 legs, and it is a counter trend move. You see here, we have 1, 2, 3, 4, 5, and then ABC. And what happened after 3 wave move, we see a nice start of a big run down to complete wave 1. Okay, so we have 1 correction, ABC, wave 2, then 1, 2, 3, 4, 5, wave 3. Remember the rules. wave 3 has to be the longest and has to be impulsive. So we can count 5 waves here, and then we have a correction in a wave 4, again in an ABC structure, and then we have 1, 2, 3, 4, 5, fifth wave here, and that on the larger degree, this is only a beginning, only a wave 1. So then we have a zigzag again in a wave 2, and you know what happened with the Euro Swiss. It collapsed in a huge. So this what we was looking. Okay, this is 1, 2, 3, 4, 5, 1, 2, and then it subdivides again to form a huge third wave down. Okay, so this is the zigzag. Okay, and they appear usually in a wave 2 place. Wave 2. Okay, so the other pattern is a double zigzag. So it means that an ABC are connected with the connecting waves, WX, and then it's continue again in the same direction. These connecting waves, because this zigzag has to be connected by something, are connected with only 3 waves. So we have a fresh example here, what we see on a let's say a silver chart. We have here a nice an ABC, and then again 3 waves down connecting this again ABC moves. This is a double zigzag. So instead of the correction unfold only in a 3 wave and then collapse, we have here a double zigzag which is connected by these 3 waves. So for example, if you go short here, because you see 1, 2, 3, 4, 5 here, okay, 5 waves. We see 5 waves here, and then a correction. If you go short here and you get this move and something happened unexpectedly, you will know that you are probably, and most probably if you do your count good, you're in a double zigzag correction. Okay, so we have just, okay, we have a triple zigzag, but they're very rare. So we hold ourselves to the simple zigzags and double zigzags. So that is only that is, nothing further. Okay. So next we have flats. Okay, flats are very tricky patterns because you need a bit Elliott Wave proficiency to recognize them. They're consist in usually in a 4th wave place, so they're very rare in a 2nd wave, and all of these ABC structures are equal. You see, there are 3 waves up, 3 waves down, and 5 waves up. This is the dollar and yen example. Okay, when we have this type of a correction, it's very annoying for the traders, for the rest of the traders, because probably they are short from here and they see, okay, corrective move, and suddenly they see an impulsive structure here and they're spooked. What is it? And they see that the market turned bullish, but when they start going longs here, the market reverses, and what happens? That's the flat. They're very tricky, and you need to recognize them. Of course, who knows them, he will go short here. Okay, so they're just the corrective patterns which you have to recognize and to be alert on. And the structure of the waves is ABC, 1, 2, 3, 4, 5, impulsive wave here. Okay. Okay. So I will hurry up. Okay. So we have a triangles. You all know about triangles. You know, it's a corrective pattern which comes into 4th wave and only into the 4th wave. So you see a nice triangle on the euro dollar. In 2010, we have many more today, but okay, I took this example. So they consist in a 5 waves with the sloping lines. So there is an A, B, C, D, E structure, and the finish of the 5th wave here, and the market, of course. We know that the Elliott Wave has 5 waves up. This is the 4th wave triangle in euro dollar. Market reverses and goes down. Okay, so when you see the sideways structure, and basically the triangles are the most recognizable waves which you're going to recognize on this chart. You just look on any chart on daily, you just look this type of corrections, you connect them with the lines, and you will recognize a triangle and only one thrust up. And triangles are usually saying that the market is balancing now and there is only one more left push up. So it gives you lots of information in what kind of psychological state the market is. Okay, so they're very good patterns to recognize. So you know where you are on the map. When you see this, you know the trend is over. So if you're long, you just have a little bit more up to go. Okay, and you have different types of this triangle. They can be ABC structure ascending, so it means that these lines will connect these lower highs, and the lower lows will be equal. So you have reversing, so they're expanding. You know all of this from probably the internet and everything. So, but they consist in a 1, 2, 3, 4, 5 waves, subdivided into 3 waves, and you have a descending when the lower highs and the lower highs here are equal. Okay, and the combination. These are very rare. Appears in the 4th place, but they can consist in a flat, let's say ABC. So we have 3, 3, 5 combination connecting waves X and a triangle which connects all of these structures. They should last for a very long time and they're very rare. So you should not bother yourself by them. Somebody asked how we measure the Elliott wave, 3rd wave, retracement, 4th wave. We are using the Fibonacci tool. Okay, everybody knows from their charts that there is a Fibonacci tool, and the tool used Fibonacci retracements, which you have on your platforms, are using to measure only corrective waves, waves 2 and waves 4, and waves B. Okay, and measuring impulsive waves 1, 2, 3, 5, A and C is called the Fibonacci projection and Fibonacci extension tools. You have them all on your platforms. So this is one example. Okay, this is the dollar Turkish lira daily. Okay, so we have a nice 1, 2, 3, 4, 5 and flat pattern here. And when we put our beginning spot here and put our retracement tool up to here, actually, you see that this retraced 50% of a retracement, and the market stopped here and then continues in a nice 3rd wave up to here. Okay, so we use the Fibonacci tool when we measure, and when we see an impulsive structure here, we measure it where to go long. So until when the correction will go. So until, in this case, it goes to the 50%, and then it formed a nice 3rd wave up. And then again, corrective wave 4, we're measuring for the 2nd wave, it reached 38% of the Fibonacci retracement, exactly stopped there and continued upwards. So with combination with the Fibonacci tools, Elliott is very powerful tool for predicting the market, because if you are a Elliottician, you will know that after impulse wave you will get a correction, and then you can go long to catch a nice portion of the market here. And again, of course, how you measure until where this 3rd wave will go, then you will take a projection tool and extension tool. If you see here on this chart, it's very, very nice, clear that by measuring these waves with an extension and projection tool, we got 2 Fibonacci levels when the market stops, exactly there. Okay, so these tools are used to measure how long the wave, or the psychology, the buyers, when they will stop buying. They stopped exactly here, and sometimes it can appear as a miracle, but it's really, really, really okay. Live charts. Okay, Grega. Okay, thank you guys. I tried really in this small. No. Wave 2 can remember the rule. Wave 2 can extend up to 100% of the 1st wave. Okay, so wave 2 doesn't have to stop in a 50%. Usually stops at the 50. But it can come down. Remember the rules we had on the 1st page. It can come down all up to here, and if it doesn't cross this low, it's still valid. You can still go long, but your stop will be below this low here. Okay. Extension actually means the levels beyond the 100% Fibonacci retracement. The extension is 1.61 of extension. It means that when you take a Fibonacci tools, you will see that here there is a level between 1 and 100. And when you turn it, because you have it to projection tool, they will appear 1.38, 1.618. So this is extension of the Fibonacci. So it means that it goes above the number 1. Okay, is that clear? Okay, thank you guys. I hope I really have tried my best in this short way of time. This usually is given a seminar on one day, just to give you so I will go off and Grega will continue.
Hello traders. Can you see the whole platform here in 2 charts? Or just 1 chart? Yes, everything is fine. Okay, perfect. So I suspect that we have just 5 minutes, so we will try to be quick here. Actually, I will do the analysis that I will do the analysis that I will probably also share it with our subscribers on our website. Okay, so let's take a look on the Aussie dollar. How to count the waves, as someone asked earlier. Well, I personally look on the monthly chart, then identify the wave, and I can see on this Aussie dollar example we have 3 waves up. Okay, A, B, and C. We know, as Alexander said, in Zig Zag, wave C is a motif wave, which means it must be subdivided by 5 waves. Okay, so we will now go on the weekly chart, and from the most recent lows, if we identified uptrend on the monthly chart, then we know that on the weekly chart, uptrend must continue impulsively. Okay, so with this being said, we will try to imply the wave count, what the price is telling us, okay, which is price is rising, as we can see on the chart here, higher highs and higher lows, okay, in clear identification of an uptrend. Okay, so we will go with this trend. We have wave 1, wave 2, an extended wave 3, and this appears to be wave 4. Okay, and on the next chart, as I will show you, this wave 4 is actually a triangle pattern that Alexander explained earlier. Okay, so let me switch now to a daily chart. Here is the daily chart. Okay, we have waves A, B, C, D, and E. We know that triangles are continuation patterns. Okay, we know that occurs in wave 4. So we have a triangle, we identified a long-term uptrend, we have a structure that fits into this wave 4 position, because we know that triangles occurs in wave 4. So we have everything that we need to know for this uptrend to continue. Okay, so we also know that triangles are 5 wave patterns, A, B, C, D, and E, and it looks like wave E could finish here. Okay, so we will now take a look on the structure of wave E. We know that wave E must be corrective wave. Okay, just let me find the 4-hour chart. Here is my wave E. We have a slow, choppy price action on the downside. Actually, it was a free-wave movement, but I labeled it as a complex WXY correction. Okay, and today's price action, as we can see on the intraday basis, was very aggressive on the upside. So what I think is going on is that this temporary low is locked in, and this move is getting more and more impulsively, which means that in the near future we should see even higher levels. Okay, now we will take a look on the 1-hour chart. Here is 1-hour chart, and I will do this analysis for you very quickly. We have here probably a leading diagonal. Okay, here is the leading diagonal. We have waves 1, wave 2, wave 3, wave 4, wave 5. Okay, and if we identified a bottom on the 4-hour chart of wave E here, then we know that market must not fall below this level. Well, when wave 2 occurred, which was clearly structured in 3 waves, prices did not move below this extreme, and in fact this move is now getting more and more parabolic, and we know that this is personality of a wave 3. So we suspect that market is trading now in a wave 3, which is usually the longest wave. So what are our bias here? Of course, that market will go even higher. So what it means, how we can take advantage of it? Very simple. We will wait on a pullback, identify a corrective movement, which will try to find the support at the previous swing high here, and then of course we will identify our stop loss area, which I suspect would be around here, and then of course we will look for more upside in this trend. So as you can see, the concept was very simple. We identified this trend, we have a personality which fits into a wave 3 on this intraday chart, so we have everything that we need to have for our prediction to follow through. Okay, so if we are good enough, if we have confidence in our wave count, then now we should take advantage of it, which means we should not be scared to build in a position and put the numbers on and go with the market. Okay, so I think that 5 minutes is actually already over. So should we stop now, Matt? So actually this was analysis that we also do regularly for our subscribers on www.ew-forecast.com. So you can also visit us there, and you will receive this analysis and many other pairs as well as gold and every pair as well. So I need to thank you for visiting our webinar. This was actually my first live webinar, so I hope everything was running well. I hope you enjoyed the webinar, and I hope I will talk to you very soon, okay? Have a great day. Bye.